All right, welcome back. How about this? Take yourself back to June of 2022, right? The pandemic was waning. The government just got done dumping trillions of dollars into the economy with the false hope of averting any negative side effects from shutting that economy down. Dumb idea. Dumbest idea of all time, by the way. People were just starting to emerge from their bunkers and were armed with a lot of government cash, and they were ready to spend and spend, and spend they did. The CPI in June, that's the Consumer Price Index, that's inflation, right? June of 2022, it came in at 9.1%. And you know what, folks? It hasn't come down since. And as a matter of fact, it's continued higher. The cost of living has become absolutely suffocating for a lot of Americans, millions of Americans to that fact. We've reached a stage where grocery prices are causing extreme financial stress for families across America. Buy now, pay later for groceries, huh? One man recently caused quite a stir on social media when he revealed that a grocery order from Target cost $64.50 in 2020. It's now $158.30 in 2026. Now, my next guest probably hears this a lot of the time. Let's bring him on for more of his sage advice. Please welcome to the show, Mr. Craig Bolanos. Craig, that's more like it, right? The idea that they try to tell me over 4 or 5 years we only had 20 to 25% inflation, that's bunk. No way. These numbers feel more like it to me. What say you?
Well, I mean, I think the Walmart grocery bill is probably a very, very adept and authentic way to make a data-driven decision. I mean, the bottom line is we're winning the war against inflation. Scott, we actually are, but we're living with scars. And the way inflation works is no one's comparing their grocery bill to what it was last month. We're all comparing our grocery bill to what it was several years ago. It's a permanent reset in the level of inflation. And that's why the issue of the 1970s, that's why the issue of 21 and 22, I don't know that we have an inflation issue. I'm actually going to say the words. We have an affordability issue in America right now because of the permanent reset.
Yes, and so I think it's another great example of what inflation and how bad it is. It's a tax. It really does weigh down on your wages because when you start to see it compound year in and year out. So in June of 2022, when the CPI makes it up to 9.1%, and then I don't even know what happened in June of 2023, but I'm going to guess it came down to, say, 5 or 6, right? 5.5 or 6% as far as the CPI goes. That doesn't mean prices came down. That means from that 9.1% rise, they only rose at a 5.5% rate for the next year. So they're still adding on top of that egregious big jump that we saw in 2022. That's why your quarter pounder with cheese never really comes down in price, even if you see the CPI come down. The prices are still rising, but at a slower pace. It's hard to get that across because I listen to the mainstream media on the weekends, Face the Nation, Meet the Press. Even some of those presenters don't get it. When they say inflation's coming down, they automatically then follow it up with prices are coming down. That's not the case. Inflation may be coming down, but prices are just going up at a slower pace, right?
No, Scott, I mean, the analogy we use at VestGen Wealth Partners is the inflation data may have stopped sprinting, but your bills never went back to the starting line, which is exactly what you're talking about, right? We have to have a realistic assessment. Your bills may have stopped sprinting, right? But your bills never went back to the starting line of where the race was prior to the inflation spike of 2022. Right. And remember those small things we coached people on your radio and your television show, like buying Series I bonds, right? I mean, when the government was selling inflation bonds at 6.8, 9.6, and 7.13 in 3 consecutive back-to-back-to-back 6-month increments, that tells you where the data is. But that's why I think there's a message to everybody. If you want to get retired and stay retired, the secret is you have to protect purchasing power. The secret is you need to work with people who aren't just going to produce nominal returns. You need to work with advisors who are going to generate real returns, and that's currency. That's taxes. That's the inflation, because you can't spend percentages in retirement. You spend purchasing power, and that's exactly what you're highlighting once again in the summer of 2026.
Right. So this is my way of explaining it. I do this a lot when I speak. because it hits home. But this is how the mainstream media would like to tell you what inflation is, right? So if last year in 2025 I gained 10 pounds a month for the entire year, and now in 2026 I'm only gaining 5 pounds a month, the mainstream media says I'm getting thinner. That's what the mainstream media is. But that's inflation, right? You're just gaining weight, but at a slower pace. But if you listen to, Meet the President, Face the Nation, they're saying, well, he's gaining less weight per month. He must be losing weight and he's getting thin. No, he's still getting fatter, but just at a slower pace, right?
Yeah, no, that's exactly what it is. It's all about the pace or the rate of change. But let's give everybody a sincere and actionable idea. I think people should look back and really say to themselves, the inflation story is still ongoing. The problem is still here for all the reasons we just said. What is the viewing audience going to do about it? Well, it starts with this. You need to have a plan. Everybody has to have a plan to grow their capital base, meaning invest through retirement, not just invest to retirement. Because if you don't grow your capital base throughout your retirement, you're never going to be able to grow your income. And if you can't grow your income, you're going to have a great 10 to 15 years of retirement. And then all of a sudden, you're going to wake up and say, whoa, my money's not going far enough. That is the classic tale of what we call fallen angels.
100%.
And that means don't just build a diversified portfolio of various stocks and bonds. You have to include all those inflation protections. Commodities matter. Precious metals matter. Maybe digital currency matters. All these things need to be rounded together to create a harmonious conclusion.
Awesome stuff. People always tell me they tape what you say and replay it because it's always really good. Appreciate you coming on, Craig. Craig Bolanos, he's a co-founder and wealth partner at VestGen Wealth Partners up in Chicago. Thanks for being on the show, brother. All right.